Hey all, welcome to Billionaire. We have a long weekend. Today I thought I'm going to bring you something, a very important learning topic where you can understand the market direction. And this is called as midpoint reversal or magic. What exactly this means is, now before going further, so if you are new to the channel, please do subscribe, share and like. It will really encourage us. Even if you don't like the video, you can post your comments, constructive criticism comments. It will be more than glad to receive your constructive feedback and improve it for the next video. All right, now imagine market is going down, all of a sudden it comes back. This is in downtrend. All right, now when market pulls back, it will never cross 50%. What is the important thing about this 50% is it is price action. Understand, how do you decide uh, something as equal in this world? So you have five fingers in right hand, you have five fingers in left hand, or say for example you have hit 100 runs. What is the 50% of it? It is 50. So how do you divide a cane between two people? You divide it equally by breaking it at the midpoint, right? So everything. And how do you divide 100 into four equal parts? You divide it into two, and then those two will be divided equally. So everything will be equally divided within itself, 50, 50, 50%. Although it is the 25% of 100, but it will be equally divided. Now, how do you decide this equality between buyers and sellers? Is the 50% logic. So I will prove it in a while. So this will really help you to understand which side market is going. Even with, you remember in the previous videos, Cambrilla and pivots, I have told you above R1, below S1 is always a breakout. Above R4 Cambrilla and below S4 Cambrilla is always a breakout. Now above a range, it's always a breakout. Now as a beginner, you will have confusion. Says for example, market gapped up, right? After gap up, market went down. So there will be a psychological thing. Okay, a global market is up or global market is down. Whatever it is, you'll have some reason to believe. Since market gapped up and coming down, you will always be thinking market can pull back, market can pull back, right? This is natural. But however, just to quickly show you, if you have seen my previous video on RSI trend line, so this is higher high, gap up, market goes up. But look at the momentum or RSI. It did not cross the previous day's momentum. Agree, it was a gap up, but market gapped up below, in between the range of 40 and 60 RSI, then went up. It was equal and coming down. This one reversal red candle is enough for a price action trader to understand something is missing. And this reversal pin bar was near the previous day low. If you have not seen, see exactly near the previous day low, around this level, market, what do you call, gave that red candle with a long wick. That was enough. Now this is based on the previous video. What is the contention of this video? The contention of this video is, if the trend is strong, whoever, buyers or sellers, they will not allow opposite party to take it below 50%. That is what you need to understand. Is it clear? All right, see here, market goes up, comes back. This is the 50%, and this 50% is nothing but it's a Fibonacci 50%. See here, this is 5, 0, 2, 3, 5, exactly 50%. And based on the market moves at any given point of time on daily basis, this 50% keeps on moving with the low and high of the swing. Now where do you get it? Now I am using something called as pivot boss pivots. You can, it's a free indicator in trading view, and I don't use any. You can use the pivots in this as well. It's very good. You get both Cambrilla and everything if you are using free subscription. But in this, I'm using only display developing midpoint of the day, and it is daily time frame. You have daily, weekly, monthly, and keep it daily. And there is a glitch in this. So once, say for example, today market is not there, tomorrow market opens, it will start calculating from this itself. So we need fresh midpoints for that particular day. So after that particular day, or during when market opens, I advise you to remove this checkpoint so that the midpoint is gone, and then check it back so that you will get fresh levels. Okay, now let's go ahead. What happens Friday? I will show you. So 50% is broken. Now this is where if you're confused with the trend, because this was clearly above R1 and previous day high, market was in uptrend, but all of a sudden the strength of the bias were taken out by bringing it below 50%. So who is winning at this point of time? Sellers. Clearly sellers showed the strength to remove all the strong green candles below 50%, and then see what happens. Once you think somewhere here below the low of the first candle, you will go short. Let's assume market then spent 1 hour sideways. Where would you stop loss, or how do you think that market can reverse the trend? It is only about the 50%. See, entire day. So if you are afraid that market can go up, so your safety bet will be market sustaining above 50%. I'll give you clear strategies how to trade this. Understood now? So entire day market was in downtrend. Do you see more green candles or more red candles? Yes, it was choppy in the later half of the day. But what do you think? Once this high is there, you should always think to short near this side to safeguard your capital, especially on a expiry. Now let's move here. This is the previous day. Market gaps down, pulls back, and watch this one. I will mark this 50%, right? This green candle is the 50%. Market comes down. Remember, just watch this one. I want to see you. I want you to see this. Big candle, this big candle 50% is here. Next, another candle goes up, comes down. Because this was inverted reverse candle, and see here, buyers thought there is a chance to push up. Where did they push up from? This 50% market went up. So always 50% acts between the buyers and sellers as an important territory to defend, because most professional traders use this. And then you get a big jumbo candle. Watch here. The jumbo candle goes back. Now from this side to this side, this is the 50%. Where is the fight? The fight is near the 50%. Since the first candle and this jumbo candle showed that sellers were strong, near the 50% seller took it down. And from here, this is the 50%. See, buyers tries to take it, but they are not able to take it beyond the 50% of this particular day, right? Market kept going down. Now this is one day. Now then after this low, this was a lower low, suddenly you saw a morning star reversal wick. If you combine on 15 minutes, right? When you combine this on 15 minutes, these are the important price action candles which you should be aware of it. See here, this one, boom. Where did it go? Where did this go? Okay, this is 15 minutes. Okay, when you combine these three I was talking about, it's a big reversal pin bar with a green candle. This has wiped out all this. So there is a how to decode price action. There are four important Franco Chova's price action candles which covers every market. You need to watch that on YouTube, decoding price action. Okay, now this was your sign of reversal anyway. But see, once this 50% is taken out, you should always watch the latest 50%. Okay, these are all moving 50%. See, with a strong green bar, see how market moved. And when market fell, exactly at 50% where it stops. So two things you need to remember. If the trend is strong, the 50% will be divided by the ongoing trend. Here, sellers were strong. They defended 50%. They defended 50%. When buyers took over the 50%, buyers went up. So this was a strong candle. Understood? You can watch it in Bank Nifty. It really works. So every candle. Now this is a sideways market, right? Now when you see this 50% not moving anywhere throughout the day, it is there only, you know it is a sideways market. Now on this particular day, even the 20-day moving average, nothing will work. All you need to do is on this particular day, mark the high, mark the low, and whenever low comes, either you can use 20-day moving average or 50-day moving average, go upside. When upside comes, go downside. This is how the range bound trading is done. For that, you have to wait for at least 1 2 hours or 3 hours of the day to understand it is a range bound. Remember, this is option trading, not stocks. In stocks, range bound works beautifully. In option, you have to spend considerable amount of time or probably take 1 or 2 stop loss. Obviously, stop loss is a must, right? And then understand the range and go with it. So this is a price action. This entire green bar is taken out by this red bar close below. You know it will go down. That's it, simple. These are the price action candles. Anyway, watch this one. This is a trend. You see a trend here. Market opens, falls sharply. This is the 50%. See here, pullback goes closer to the 50%, then a reversal pin bar, boom. But this low holds. This is previous day low. And then you get one more pin bar, goes to the midpoint, comes down. And the second time when this bar takes out this big red jumbo bar, the close is above this. Watch this. These are all price action, guys. I'm explaining price action, so understand this as well. Above midpoint, breaks this jumbo candle. 50% is broken upside. The midpoint reversal has happened consecutively. The bears who were defending the 50% zone lost here, and see market just went up. And after that, it never even came closer to the 50%. This was a kind of range bound day, but the 50% is moving up and down with little difference. So understand the high is broken, market went up. Then once this 50% is broken, see here, market comes, bears are defending the 50%, goes down. So what would you expect? You expect this 50% to hold and defend by bears, but sellers fail here, buyers overcome the bears. So this is your point of entry. Just by watching this, you should understand here they are defended, but here they fail to defend. You know market is going up, and when it is coming down this 50% level, you need to understand that if the market this high is broken, if buyers are strong, this 50% should be defended by whom? The buyers. But buyers fail, a strong candle breaks, you know this is your market is downside, go short, market goes down. This is exactly how you need to trade. Now here, but it gives you a direction, which side you have to go when exactly there is a clear shift of trend. See this one, this is 50%. Market goes up, comes down, but clearly this 50% line is not moving anywhere. For the major part of the day, from 10:40 till 3:30, this is one straight line, which means market is in sideways. So if 50% is moving up and down, you can understand the participants or the volume is increasing, hence the price is moving. But when the line is just straight and remains for hours together, that means on that particular day, it gives you a clear indication to not trade. See here, almost same line. What is it telling? Volume is very low. So there is no, I mean, if you understand the secret of pivot boss, what kind of traders are trading here? Initiative or responsive. Responsive traders, you go up, people when prices are high, they will sell. When prices are low, they will buy. This is exactly how you need to think. See, this is a very strong upside, then comes down, spends. Okay, we have a strong up and down. So since we had such a strong pullback, below 50%, this was our midpoint, and this was a very clear indication on this volatile up and down move. Whoever defends this will be a winner. So bulls failed here, but again took over from here, so you could have gone here. So a lot of insights you will be getting with 50%. So as long as it is above 50%, it is in buying. Now quickly, let's, so you know our setup. What is our setup? You can use RSI definitely. Then let's go to pivots. Let's use 20-day moving average. Now, okay, this is, you can add Cambrilla as well, nothing wrong about it. So this is, please understand the naked chart was looking very simple, right? If you understand the price action, you will trade with naked chart if you know who is moving the price with 20-day moving average. Let me remove these CPR and pivot so that you understand the power of simplicity. When things are simple, it is that much easier for you, because in market there's only two possibilities, right? Is there anything in between? It's again 50%. 50% of probability you lose, 50% of probability you will win. The probability is always 1 and 0, right? Between 1 and 0. So you need to understand there's always an equal probability. Now watch here. 50% defended, below 50% is down. So below 20-day moving average, you have a strong conviction. See here, market is going, okay, 50% can be broken, which is the first hint you're getting. A strong candle breaking the 20-day moving average, market went up. And 20-day is a kind of mean. Whenever it goes too far away from 20-day, price tends to comes down. So 50% will always be around more or less 20 moving average, simple moving average. Now see here, 50% is broken, price comes below 20-day moving average, prices is going back. It cannot cross convincingly 20-day moving average. Remember, 20-day moving average is a zone. Just for our, what you call, visually to measure it, they put a line, but market is going up and down, right? It will always have a thick range. This is a range. So whenever a strong candle breaks, you need to understand it's going upside. But with this 20-day moving average and 50-day moving average, and along with the pivots, you can understand or get a bias which side price is going. Because I showed you 20-day moving average is very strong. See here, market comes down, goes to 50%, breaks, comes down, goes to 50%, comes down. And here 20-day is moving. Once it crosses 50-day moving average with this candle and about 20 days, see here, beautifully taking support of 20-day market moves up. You can just simply wait here. See this one moving above, price breaks 20-day moving average, the stop loss is around 20-day. You will wait whether it takes support near 50-day moving average, broken from here, move. Now to this, if you add, either you can add candle pivots or you can add traditional pivots with CPR so that you can read the markets more convincingly. So below S1, market is in downside. So if you're that kind of a personality where you just want to safeguard your money and go with the trend, wherever 50% breaks, you can take the trade, because market below S1 is always downside. So you know, yeah, market near S2 is a pivot. Once S2 and 50, 20, see this candle, how beautifully it is defined. 20-day moving average is broken, 50-day moving average is broken. In between, these yellow dots are weekly pivots. S2 is a pivot. So everything is broken in one shot. So where will be a stop loss? Below this candle, if you're a risk taker, I want a very small stop loss because I'm a momentum trader. I believe if momentum is upside, it should not go below S2 pivot. See here, market comes down near to S2 pivot. Again, this is a 50. There is so much of things you can understand. Even every candle midpoint will be defended. You know that? So see, this candle comes, the midpoint near S2 and then goes up. This is how the market works. All right. So with this pivots understanding, you can clearly see which side market is going, whether it is in upside, downside, whether you need to stay away. So that's exactly what the objective of this video is. See here, above R1 is a breakout, you know. So initially, so here prices are not opening above R1. You have some price action here. The market goes down. So some of us might be very scared. So what if market goes down? What if market goes down? Central pivot, above central pivot is buying. Okay, you have, okay, even the price above 50%. So buyers are strong here. So let's buy. It's about 20-day moving average. Now here, below S1, yes, market is pulling back. What if market goes up? This will be the fear factor, right? Now here, when the pivot and the 20-day moving average is broken and prices are below S1, you know, market can only go one side. So let's have a bearish bias. So this is how it can safeguard you. Now here, market is between S1 and S2. Yeah, you have a wild move. The 20-day moving average is sideways, but still you can have some scalping opportunities above 20-day, above 50, or below 20-day, below 50-day. I told you that if the 50-day moving average is very long, it is a sideway, more or less sideway here. Even Above 20-day, above CPR, above 50-day, you have a scalping opportunity. Below 20-day, below 50-day moving average, even if it is upper CPR, you have a scalping opportunity because you know who is weighing more with 50%, whether buyers or whether sellers, right? That is how things work. See here, market is a very range bound, near very slowly it's moving, but as long as it is above 50%, you will have some kind of what do you call confidence. Yeah, market can go only in one direction, upside. So my stop loss is below 50%, so it's holding R1, holding 20-day moving average. So now it went above 20-day moving average. Let me wait with patience, let me wait with patience. So this is the magic of midpoint reversal or 50-day moving average. See here, near R1, it faces resistance. The 50% is previous day high, so it failed to defend with this inside bar. If you don't know the power of inside bar, you could just take the pivot is breaking, 50% is breaking from till here CPR, you know, it's going to test, it's your money. Upper CPR is broken, you know, upper CPR is biased. So without 20-day, without this, I know this is a range bound, high and low. I will just enter here, my stop loss will be here. See, this is wick to body engulfing, first candle. So you have a lot of buying signals if you use a price action, but when you add this midpoint reversal, it's going to give you some crucial information on what is happening, right? It is up to you whether you want to use it or don't want to use it, but it's a very, very good indicator if prices are moving high or prices are going. See here, roller coaster day, goes up sideways, comes down. What is defending? When you see this, forget here. When you see this kind of fall and sharp reversal, what will give you confidence to take the trade? The only thing which can give you confidence is, one is this is a weekly pivot, but still such a strong fall. And this is a very big reversal to wick candle. A long reversal wick to candle cannot be trusted. You need a very medium trustable reversal wick to candle. And then see another big red candle. And when you see this green candle, oh, I will keep here. I won't keep this low of this candle. I won't keep the previous week as a previously weekly high low pivot, but I will keep 50% as my stop loss. Anything beyond this candle, I'm going to exit and see what happens. Market just goes up. Even with these red candles, the initial move, you will understand, okay, I'm above 50% uptrend. We are above R2. We can think or take our bets to see that market will hold and will go strong. What will stop you if you are a bear? Same 50%. Let me wait for a candle to close below this 50% or below this pivot. Then I will take short trade. Maybe I may have a mean reversal. So this kind of thinking, analyzing the market, this 50% will be very useful. Hope this video can add value to your trading. Please do like, share, comment. Thank you all. Have a great weekend.